What's going on, guys? This is Foresight Capital, and today I'm going to cover Palantir Technologies and how I'll be trading it towards the end of this week. Yesterday, I made a video outlining that Palantir seems to be in a bit of a bearish technical trend, and that was confirmed a bit more today, so that's presenting some great buying opportunities for those who are looking to get in at a value compared to where it's recently been trading. The day before yesterday, I also uploaded a video that my price target for Palantir is somewhere in the $50 to $55 per share range, just based on some of its industry peers' market caps and how they're trading in relation to their PE ratios and where I think Palantir ultimately can be. But a lot of the trading that's going on right now is technical, and we've got some really nice patterns set up. So I wanted to highlight now, after today's downward price action, how I will be trading the stock. So I've got three buy levels outlined here that are very close to the current price, and we've seen a very nice step down pattern here over the past couple of days. Ever since reaching this 33.50 all-time high, we've had a sell-off with some consolidation just above the buy zone that I outlined, before another sell-off, some consolidation, and then even more of a sell-off, and we've now trended down to use this yellow buy zone as support twice over the past couple of trading days here. We're getting pushed down by the 9-period moving average, and we're now trading below the 50-period moving average. So all of those things are leading me to think that Palantir will be trading through a bearish pattern for the next couple of trading days, assuming that no sort of information comes out on any new government contracts or any new large clients to speak of. So technically speaking, I can now see us breaking through this yellow buy zone, which I labeled yellow because it's sort of where I would start to consider nibbling more on Palantir. Now, I do own 100 shares at a cost basis of about $28.16 per share, and I am looking to add more, but I'm looking to purchase in this green zone here. So if we continue the sort of pattern that we've been seeing here, this relative downtrend with a little bit of consolidation in between, what I can see happening is that over the next couple of trading periods here, we could come down to the buy zone line and get some support from this overall trend. So this is a 20-day chart here. Each of these candlesticks represents 1 hour, and as we can see, starting with this first big green candle back towards the beginning of November, we've had an uptrend that has been confirmed for a couple of trading day period here. We use it as support right along in this range, which was the middle of November. We use it again towards just before Thanksgiving, before starting this big run up in price action that wasn't really warranted by any sort of stock news, but just sort of hype around the stock as it kind of took over YouTube, it took over Twitter, it took over Reddit as kind of like the retail trader stock of choice, along with some institutional buying coming in, which ultimately picked up the price to a level that was realistically unsustainable based on their most recent earnings report, in which their losses were a bit wider than expected. We've still had this big run up simply because they have a little bit more cash on hand than expected and positive cash flow, but overall the earnings per share were actually worse than expected, and we've still seen the stock more than double since that time frame before settling back down to a more reasonable $25 per share price point. So let's just say that we think that this sort of pattern can continue, and I do think that the next level of support that we have, if we test this yellow line and don't hold it, which it seems like could happen tomorrow morning on Wednesday morning, I could see a quick drop down to this green support line, which was just made basically 4 trading days ago, just before the Thanksgiving holiday, which is ultimately where I would consider buying more of this stock. The reason that I like this area is because we have this very strong support line of the general uptrend of Palantir, which has been basically going on for the past month. Keep in mind that Palantir has only been a publicly traded company for just over 2 months. So this is really all of the data that we have to go back on. Is if we look at their historical price action on a 1-day chart here, and we go, oh, that's a 1-minute chart. If we look at the 1-day chart here, we can see that they had a lot of consolidation and then just went on an absolute tear. In fact, the chart looks pretty crazy if we look at it this way. But we can see that it's sort of trending back down towards this historical trend line that we have going on here. So we'll hop back out to the 20-day 1-hour chart, and we can see that the next line of support, if this were to break, which it has been used as support twice, would be this level. And that's where I would consider buying either calls or buying shares. Now, this is not a recommendation to do so because there is pretty substantial risk still in this stock. In fact, because their losses were wider than expected and because they have such a bad return on equity, the fundamentals just aren't there to support the current market cap that we have. Even after the sell-off, if we pull it up here, we've still got a $47 billion market cap for this company that has negative earnings per share. And while that's not unthinkable, if some sense starts coming back into the market and investors start looking for more value stocks, you're just not going to find it in Palantir at these levels of valuation. Where you start to see more value is somewhere down in the $14 to $15 per share range, because that would put it at a more realistic valuation for the level of earnings and revenues that they currently have. This big hype surrounding the stock has really been surrounding some of the government contracts that they've been able to achieve with a quote-unquote aeronautic player as well as the U.S. Army. So basically just some big contracts have thrown a lot of hype into the stock and caused this sort of insane run-up that we've been seeing. And I'm not saying that you shouldn't trade Palantir, because I absolutely am myself, but you definitely want to do your own research and make sure you're comfortable with the risk that even if we do fall to this level, the valuation still doesn't make sense. Technically speaking, though, if we do see this green level achieved and we see some consolidation after that, we really don't have much time before we're running into this long-term trend, and I would be looking to use this as support. So if we don't get a big bounce off of the green level after this much of a pullback from the $33.50 high down to about $22 per share, if we don't see volume come in and start pushing the share price majorly higher, we'll at least want to see the stock riding along this major trend line. We've also got the 200 period moving average, which is creeping up as kind of an additional level of support. So all of this is playing out very well to say that this should be a very bullish area if you are looking to buy Palantir, and we do see some fading into the later part of the week. This is an area where you could consider buying, because you're going to be wedged up with the long-term trend. You're going to be wedged up with the 200 period moving average as support. So you've got two major lines of support. Conversely, though, if we see it break through that level, or if we see not a whole lot of buyers come in and not a big bounce off of this level, like we saw here this afternoon, we saw a pretty big sell-off and then a pretty big bounce, and then we faded through the afternoon on low volume. If we don't see any sort of bounce and we just see a slow grind below this green level, I would stay away from Palantir, at least in the short term, because the next level that we realistically have, assuming that the 200-day moving average doesn't also hold, is somewhere in the $18 per share range, which is only $2 off the price, but that's a 10% loss right off the top there. So if you're looking for value, again, $18 or even $14 is realistically where the stock could start to see some value in actually owning, and it's where you could start to see some value in owning the stock, assuming that you're not trading this sort of technical trend here. So ultimately, what I'm looking for this coming week, for the rest of the week, if we look here, this period covers basically Wednesday and Thursday, is a slow grind down, but I want to see a bounce off of this green level, and if we can see some volume, and we've got this long-term uptrend down as our support, then I feel pretty confident in buying some more shares. However, if we see a slow creep below or even a big sell-off below this line, I'm going to cut my losses on the shares that I currently own. Even though I'm selling covered calls against them, I'll just outright buy back the covered call and I'll sell the shares, because after that, we've really got a long way to fall before there's any support, any sort of value or support in the stock. So that's just how I'll be trading it over the coming trading days, Wednesday and Thursday, towards the later part of the week. Make sure to leave a comment down below on where you'll be buying Palantir, or are you staying away at this point. Thanks for stopping by. Don't forget to subscribe, and catch you in the next one.